So I'll give you several practical examples of analytics. So a bank that I worked for, I was the analytics manager. And we had a problem. We had about 260 branches, and we didn't have any customers coming into them. That's a big problem. And so I said, how can we solve this? And I said, well, could our employees make outbound phone calls to customers? And of course there was, we could never call customers. That'd be horrible. They would think we're telemarketers. They would hate us. We'd see a lot of attrition. It'd be awful. Well, with the backing of the CEO, we were able to do that. And over time, remember, it was a process, and you have to lead through change and lead through obstacles, lead through resistance. But over time, we were able to make more than 300,000 calls to customers every year from 260 some odd branches in 4 states. Why? Because we had a system that we developed that mined our data every day according to our customer needs, shipped it out electronically to the appropriate branch, put it on each employee's desktop, gave them assigned customers to call, taught them how to talk to customers in a way that was non-threatening, but thanked them for their business. We were hugely successful that way. Now, was there resistance? Sure. Did people say, hey, I wasn't hired to do that? Yeah, they did. But over time, the metrics of the jobs changed, like I talked about in the last presentation. We started incentivizing and hiring based on what was really important, based on customer contact. And analytics was the system that fueled that. Next, I've got a client right now who is looking at profit groups. So you saw this graph in the previous presentation. What we're doing is looking at high-value customers here and high potential. And we're looking at what characteristics of the high value do these people in high potential have. In other words, who is a good candidate to go from high potential to high value, and how can we get them there? So what we found is that we could increase mortgages by $41 million. We found that mortgages was the one product that people who look like high potential, high value, but were down here, we found mortgage was what they didn't have with us. That exists in your credit union's database right now. And so the point is, when you're thinking about a system, an analytics system, a way of using analytics, what you're doing is this thing that we call member portfolio management. So we're not going to just do a one-time campaign here. We're going to keep trying to figure out how can we stay in touch and build relationships with these high potential folks and try to keep them at least there and try to migrate them upward as much as possible. So it's not just a one-time campaign. It's an ongoing way of thinking, an ongoing part of our strategy. Next is saving high-profit members. So this is an executive dashboard of a system that my partners and I created. And any system, any analytics system that you purchase at your credit union, technology system, it should have an executive dashboard that people at your level should be able to understand and build strategy from. It shouldn't be a bunch of reports or a bunch of mumbo jumbo that you can't understand. It needs to be something that is visual and just jumps out at you. So what we have here is something that's a little bit scary. We have what we call, you can't see it too well on the slide, but we've got end zone, red zone, mass market, and lower tier in terms of profitability. And we call this member portfolio management. So we're trying to manage members in terms of how profitable they are. Not in terms of their value as human beings or their needs, their financial needs, but rather who's helping us keep the lights on at our credit union so that we can continue to operate and serve our communities. So here we found that in the end zone, about a third of our most profitable members only have one or two services with us. They basically have a mortgage, and that's it. We haven't cross-sold them into our other accounts. Either our process is defective or they didn't see the value in switching the rest of their relationship to us. It was too hard. They were too entrenched in some other bank. We didn't get their account. So consequently, when the loan pays off, when it gets refinanced, whatever happens, those members are gone, and with it, our profitability. So we've got to have something that has a two-pronged approach. One, which intervenes right now, identifies and intervenes with those members and tries to cross-sell them. And we know specifically who we want to cross-sell. This isn't just a general marketing campaign. This is very, very focused. And we want to build relationships with these people. So that's one aspect of it. But the other is, what process do we have or not have that's allowing this to occur in the first place? And that's something that we have to go back and fix. So a fourth practical example is improving lender performance. This comes from a system we designed for a client that is in Iowa. And they said to us, we're not getting the pull-through rates on our mortgages that we would like. Can you help us? We don't know why it's occurring. So we built something that looks at every step of their process, from application to pre-approvals, underwriting, processing, closing, the whole thing. And we looked at it by lender, etc., by product. And one of the things that we found out is that of the mortgages that are either pre-approved, of all their mortgages that are approved, 25% of them don't get that mortgage with that client. They go somewhere else. Well, if you're talking about increasing your pull-through rates, now we have to understand, we're using analytics to understand, why aren't they booking that loan with you? Is your process too slow? Is somebody else giving them a better rate? Are you getting, what's happening? Is somebody easier to do business with? Those are all the questions that you can start asking and finding answers to once you start looking at these numbers and saying, I don't like that. Maybe that's a problem for us. So then this system is also used as to evaluate lenders against each other and see how well they perform in each area of the loan process. So we create scorecards from it. So what we're doing here, if you think back to the 8 pillars of strategic alignment, this is the focused execution part right here. What we're doing is we're saying, okay, we need greater pull-through rates. And that's the big picture. And then strategically, we're trying to think about how we can get those, what are some trends that are or are not going right for us. And then we're going down to the individual performer level and seeing where in particular might we have some issues, but also where are some star performers and how can we make best practices out of what they do and communicate those to everybody else. So here's a bonus example. I told you that there were 4 practical ways. Well, here's a 5th. So here's a client here that wanted to increase small business lending. Who in here does small business lending? Nice. Anybody not do small business lending? Let me tell you, this is one of the greatest areas of opportunity for credit unions right now. Small business owners, like me, are very needy. We have lots of needs, accountants, lawyers, websites, lead generation, not just financial services. It goes on and on and on. But this particular client wanted to know, how can we increase small business lending? So what we did, using analytics, was we took their branch system and we said, okay, what what areas of Atlanta, metro Atlanta, what geographies have high propensities for small business lending. We have that data available to us. And then what branches are associated with those geographies. And then we say, okay, now we know what branches we've got to really build small lending teams into. And we can take our small business lenders and assign them to various branches. And we can also merchandise our branches and train our employees accordingly for the need, how to talk to small businesses about lending. Really practical ways to use analytics. The ways analytics can help are endless. Asset liability management, loan risk, new member growth, strategic planning, which y'all are probably involved in, budgeting, all kinds of things. Channel analysis can make you a lot smarter. And we talk about velocity, all this information and the insights that you glean from it, from analytics, is going to make your goals, more precise, going to inform your employees more clearly, and you're going to be able to proceed at a faster rate.